Welcome to Momentum Monday. Today is November 26th, 2023. Happy birthday to my mom. She has a birthday
Hey,
today. She's not watching, but just in case.
Mama, I don't know.
How was your Thanksgiving, Howard?
Good, the kids are here. Yeah, I ate a lot. Did some biking. Um, got a minor miracle. What we got like 26, maybe today if they don't fuck around. My hearing note. Another 13 hostages, 26 hostages released. Good. It's a good weekend.
Yeah.
The shorts are held hostage here.
What are you saying? I'm sorry.
Short sellers are being held hostage.
Yeah. Definitely. I mean, it was a short market week, but even though we saw an attempt for a breakout after this tight range consolidation here in the Qs and the SPYs. But it didn't really went anywhere, which is it's not a big surprise considering that huge move that we've had since end of October. Just a straight line up, lockout rally. Everyone that was waiting for like a tiny 3-5% pullback to get in didn't get it. So now that it's back near 52-week highs, I think it's normal to see some back and forth, some at least sideways consolidation. So it will be curious to see if small caps will try to catch up, since we're seeing this tight range consolidation right near the 200-day moving average. So if we see the Russell 2000 really go above it and start to trade above it, I think we will see much bigger, much faster movers. Because small caps in general, they move faster than the large caps, even though this year large caps have done so well. Anything from NVIDIA to Facebook and Amazon and Google and Microsoft. Speaking of NVIDIA, they reported earnings, and as expected, they completely crushed earnings estimates. I mean, look at these numbers: 200% sales growth, 600% earnings growth. But what's matters more right now is the market reaction. Obviously, the market was expecting these numbers. This is why we saw this 25% rally in the past 3 weeks or so, and now it's probably consolidate. I would assume the pullbacks to the 20-day, maybe 470, 460 will be bought as it consolidates for a potential breakout. But another point that I wanted to make is that I remember some people were commenting at the beginning of the year when NVIDIA was gapping up on earnings, and they were wondering, why is it gapping up? Since pointing out the negative earnings and sales growth, but the market is forward looking. The market looks 12 months ahead of time and expects different numbers. The market doesn't trade based on the past, it trades based on expectations. And in this specific case, the expectations turn out to be correct, and just NVIDIA continued to report strong numbers and make new highs.
Yeah, I will. It's a really good point looking back there when they were negative, and now it's 600% growth. I think we were talking on Trends with Friends that the most likely outcome was a gap and go. And sure enough, that's not the outcome that we had. I sold some puts, which everybody was making fun of me, but I'll collect on those because the premium were so high. I think the options kind of controlled this one. People didn't want to pay $500, so there's just a lot of options that are going to have to expire for the next move to really happen. But I think the most important point about AI after what we talked about the last few weeks is the secular trend is on. Just like we're going to be talking about e-commerce for 20 years, right? COVID sped it up. You're going to see that the war speeds up AI, and the settlement, AI fixing its board will speed things up, better or for worse. I'm not going to comment, but it's going to speed things up. So So AI just gets faster and faster. So we've gone from, I was saying to the guys, there's been really three secular, I guess you could call mobile four. You've got the internet, you have the mobile internet, you have e-commerce, and now you have AI. And we can talk about wiggles and quarterly earnings announcements, but the secular trend in the NVIDIAs and the competitors is what matters. Position yourself to catch this wave, which is, why I've always done QQQ over SPY. The odds of me being able to pick which chip maker, and a pretty big move on Intel, right? Like it was left for dead.
Definitely.
Been left for dead. What a move. Probably the best move, one of the best moves of the year. Where's it on a weekly or monthly?
Here's the weekly. And
so you wouldn't have seen that very,
a...
very, very low base activity, and then boom, pretty much a double this year. So you can see it's secular. This doesn't have to do with your pick stocks for sure, but SMH is really the new way. SMH is kind of right in there with industrials, right? They explain everything that's going on. And I'll tell you what, secondary but still important is XLF, which broke out like 8-month highs. And there was a period back in March, April, we were like, well, if they break down, and they were looking at breaking down a few times, that wouldn't bode well, but that trade never happened. And instead you have 8-month highs. So that's another notch in the bulls column. And again, this could be seasonal, could be hedge funds giving in and trying to chase the markets for the next 2 years. But hey, your job is not to, profits aren't judged by good reasons or bad reasons. You make money when the hay shine. And right now, a lot of things line up for just more strength. And we've been saying that now for a few weeks. It's like the jury was out, seasonally looked good. Now seasonality is playing out. There's one of the biggest walls of worry, distractions happening with, China visiting US, the wars, the college campus nightmare, who's running for president. And sure enough, markets go up. Some individual stocks I've looked interesting. Coin, I think a huge benefactor from just not going to jail. Binance gone basically from the US.
Yeah.
Surviving is part of the game. So with Binance now basically gone and with FTX gone, I mean, if you're going to use a brokerage in the United States, it's Coinbase. In the drone defense space, AVAV is kind of breaking out again. I think it's an Israeli company, but based in the US. Arlington, Virginia, but it was an Israeli company. That's pretty strong company. Not cheap, 40 times next year's earnings, but earning money. And I think we've seen this has been a drone war, at least in the Middle East. We're not hearing as much about Ukraine, but obviously drones. So that's not a chart that looks terrible. No. Taser, another one. Axon, right on the verge of all-time highs. So again, just kind of these industries that you don't normally think of, and these are all 20 billion. What's AVAB? So these are like.
Let's go back to AVAB. It's 3.5 billion.
Yeah. So there's a lot of companies that are 3 to 5 billion on their way to 20, and then there's going to be a lot of $20 billion companies on their way to 100 billion. And that's how you can try and categorize. Owning the index, but owning a few names can be interesting. Palantir looked great, but has pulled back. You and I are along that.
Yeah.
Not cheap, but had a pretty strong reversal right into.
It's normal. I mean, we should be thankful for pullbacks. Otherwise.
Yeah, we were saying last week, don't chase, but this may be an opportunity to add into this pullback. What else did you see that was interesting?
I mean, you mentioned e-commerce. I mean, Shopify made a big move. Now probably needs time to consolidate before it breaks out.
I can tell you is I've never used Shopify more, and I'm kind of a late comer. to this. So I use Shopify, the app.
Amazon setting up,
Yeah, Amazon's setting up beautifully, actually.
yeah.
But I think Shopify has just more direct juice. And boy, I'm using the back end of distance. So I was really tracking our one of our portfolio companies. I was really tracking Black Friday sales, and they really were up 300%. So it's really interesting to use the Shopify app and just being able to just go track every aspect of a customer journey and how much they spend and what products are moving. So it's like truly is like a dashboard into e-commerce. Yeah, so Shopify, Amazon look good. What else? We got financials. We've got, and then
some of the like price leaders like Elf, which is like a cosmetic company, tested the 200-day. Now it's back above the 50, kind of going sideways. So in a good market, if we see a breakout above 116, 117, we might see it like testing back 140.
Okay.
In a strong market. I mean, there are quite a few interesting looking names. This one is a decent setup. They report earnings though this week, so it's
IoT.
makes sense to see how the markets will react.
Cloudflare looked interesting.
Which one?
Cloudflare looked interesting.
Yeah, net definitely the whole cybersecurity space has been on fire. Net belongs to it, so it's kind of setting up for potential.
Kind of perking up there after a long base over a year.
Crowd or kind of, I mean, ZS reports earning tomorrow. Crowd reports in a couple of days, so we'll have a couple strong reports in the space. One strong earnings report from last week was SYM. Symbiotic broke out on strong earnings. Now it's kind of going sideways. So I'm keeping an eye on this one to see if it sets up. It's been a big mover this year.
It's pretty gappy. Yeah. Wow.
Yeah. I mean, it's very volatile. System. But if this bull market continues, eventually we're going to see a transition from all the mega caps like Facebook and Nvidia that are moving much slower in general. And we're
law of large numbers, right? Eventually people say
I want to see a transition towards smaller cap, like micro caps, that they can move a lot faster. If this is a real bull market, we will see this transition at some point. It's always been
let me share your screen, just like money comes out of Bitcoin. Can you share screen?
You want to share your screen?
Yeah, quickly along those
go ahead.
Can you see the small cap sectors there?
Not yet. You're not sharing yet.
Oh, hang on. Share screen. What about now?
Yeah, we can see a small cap. Yeah.
Okay, so let's put this together in Koifin JC. So you can see, small caps may not be having a good year IWM, but here's three parts of the IWM. The information technology, which is PSCT, is up 17%. So small cap tech is underperforming other small sectors. Consumer discretionary up 25%, and then industrials, small caps up 35%. So IWM is kind of held back by banks and financials, as they are as financials are also holding back kind of the S&P. So you can see that hedge funds, have a million ways to slice and dice. So if you use Koifin, you can pull this stuff apart too, which is mostly free. So if you really want to figure out, try and take a shot at where the world may be heading, it's very hard to bet against indexes, but let's just talk about the size of indexes. Here's a chart. Here's a statement that's pretty interesting. He runs an ETF, Julian. The Magnificent Seven have grown their collective market cap by 4.7 trillion this year. That's nearly double the entire aggregate worth of all companies listed on the Toronto Stock Exchange. So we can make fun of other markets and say, but think about it, you wake up in Canada thinking you got your work to do, and the size of the Magnificent Seven's profit, like, change this year is bigger than the whole market that you cover, right? And Canada's not a tiny market. So it just goes into what you're saying, Ivan. At some point, people may take their money out of indexes to keep their money in the market and try kind of closet indexing, which is what I recommend. I like direct indexing, which is kind of unpicking a few names. But the next version of what I would do would be closet indexing, where I would be, if I want to be 100% long, I'd be 70% long the S&P or QQQ, and then 30% some stock picks, right? What would allow me to go find these AVABs or axons that may massively outperform if the big seven don't have the year that they're having. You know what I mean? So I think you're going to see, like, that's the way I would do it if I was running a hedge fund right now. I'd closet index. I might bet next year maybe the Magnificent Seven may not have the same type of year. So there's many ways. Those are the two charts that stood out to me. The third one, Ivan, was JC put this together, is the XLF. And you can see, it looks a little different than the way JC charted it here. You can see the new 8-month high. So pretty healthy market overall, even with rates at 7%, or mortgage rates at 7%, but 10 years falling. And the dollar's getting weak too, and that's kind of been, a factor.
Yeah, definitely.
So
the pullback in the
dollar. If you pull up Latin America, and I'll switch the screen up and go back to you. If you take a look at ILF, if you take a look. Take a look at ILF. You can see it like kind of perking, but again, this is very much attributed to the dollar.
Yeah, we saw people in Argentina, which they just had their presidential elections, and I guess the market liked the candidate that they chose. So we saw a big gap last week, and a lot of the Argentine names.
Yeah, be wary. I mean, he said he's going to fire everybody, and then he hired U.S. bankers to go de-dollarize. So it's easy to yell one thing, like we're going to just, but in the end, it's hard to get away from old methods. So I still think the best place is U.S. because we all do business. But listen, people are going, like I said, people are going to, like you said, people are going to start looking outside the comfort of just being indexers.
Yeah.
Yeah.
It's kind of hard to outperform the market if you're going after the Magnificent Seven. I mean, it worked this year, I guess, but they are the market already.
Yeah. So, they are the market. And so, but there are creative ideas out there. And like I said, direct indexing one, and the other one is kind of closet indexing, but trying to apply a little bit of stock picking on top. Where are you positioned? You're probably cash and long here.
Yeah, definitely long in cash. Like I have a few longer term swings, like Shopify, MDB, stuff like this. And then I use the rest of the capital just to trade more aggressively during the week.
Okay.
Yeah.
But all right, everybody, have a great week, Ivan.
Yeah, have a great week. See you next week. All right, bye.
See you.